Hi everyone, thank you so much for joining us on this video chat. So I'll just start a little bit about ourselves. My name's Amit Jeswani and I'm the founder of Stallion Asset. What we do is we invest in high growth companies, typically have a portfolio of 15 odd stocks. We need companies that generate free cash flows, can consistently reinvest capital at high ROICs, monopolistic in nature, and customers love the product. So that's typically what we do. So in India broadly, there is always a bull market in about 30 secure stocks. But out of these 30 stocks, 15 stocks keep changing every 3-4 years. For example, 2009 to 2014 was about pharma and consumption, while pharma topped out around 2015. A consumption trend continued, and then financials joined the rally. So pharma got shifted by financials, and then NBFCs took over. A large part of NBFC stopped out in 2017, but the trend shifted to more quality stocks. So there is always a bull market. So the whole time, the game is to be in the market for 10 years. There will be broadly two bull markets, two bear markets in between. If you can survive the bear market, make money in the bull market, you should do very well in the next 10 years. That is something I'm very confident about. So we typically invest only in four sectors. That I'm not only, but a large portion of our portfolio is there in four sectors. That is consumer, financials, technology, and pharma. These are the only four sectors we invest in. We do not do steel, government, airlines. It's just that it is very difficult to get rich and stay rich in these kind of businesses. Our goal is to get rich and stay rich. What have we been doing? So we have some cash in the portfolio right now. We've cut some financials. So whenever we are bullish on the economy, broadly, Stallion had 40-50% weight in financials for the last 6-7 years. We are not so bullish on the economy so much, so we've cut weight in financials. So our weights right now is technology, consumer, pharma, and financials. So that's how our portfolio is currently placed. We do have some financials as well. It's not that we don't have financials. We have two stocks in the financials basket as well. We do believe that if you see every recession globally, so what has happened? We are seeing one of the largest recessions since 1929. There is only one asset class that rallies in absolutely every recession, and that is gold. So you need to look at companies which get benefited by gold. I'll just give you an example. Mudud Finance between 2008 and 2010 grew its loan book 100%. This is just for example purposes. What happens typically when there's a large crisis of this magnitude? Unsecured lending freezes. And whenever unsecured lending freezes, SMEs still need money. So they would go for, let's say, secured lenders. So that's why probably it's the only NBFC which is still positive year to date. You need to find pockets of growth. The game is going to shift towards utilities. When I say utilities, I do not mean power companies, high dividend yield companies. No, that's not what I mean. I mean companies without which you cannot live. Something like, let's say, Amazon in the US, Microsoft. So Amazon has AWS. The more time, so that is a hosting platform. AWS will keep growing at faster pace because you spend more time on internet. Internet is now utility. So you need to think about how you can play that game. It's a very decent game to play. So our view on the market is that yes, we're going to have a recession. Yes, the economy is going to be weak for short term. If you can basically survive in this the whole phase for the next 6-8, no bear market ends in 45-50 days. Make no mistake on that. This can be a larger bear market and it can end sooner. When I say sooner, I mean 3, 4, 6 months from here. or it can be a larger 1-2 year bear market. You don't have to worry because there's always a bull market in some sectors, some asset classes. While Fed printing money guarantees us a bubble is going to happen, we have to catch that bubble. That is very important. The last time there was QE1, 2, 3, there was a bond bubble which happened, and bonds gave 30, 40, 50% CAGR. If you remember, in 2012, Greece was yielding 20%, 20, 30%. Italy was at 20% 10-year bond yields. These bonds actually became negative. So when you have Fed and US fiscal stimulus, which is as large as 50% of the US economy, I can guarantee you there's going to be a bubble. The only question is if you and me can catch that bubble or no. Can we ride that trend or no? We do believe there's one asset class which will have a very large bubble. For example, it's not right for me to take names, but we do believe one asset class is going to have something like gold, technology, utilities. When I say utilities, I mean consumer and consumer pharma. You can't live without them. They have no impact from the economy. Those kind of places should be looked at. So our priority remains technology. We do have some gold. We have a consumer, a lot of consumer, a lot of consumer pharma. We need to ride this through. This bear market through. The ones who survive this bear market, I'm virtually sure that you'll do well in the next bull market. Make in India is one theme that we are looking at. We don't have a large exposure there yet, but that is something that we are looking at aggressively. So it's broadly going to be MNCs who were already invested in India, but also get their sourcing done from China. So that can be one thing. So something like Honeywell, for example, gets 150, $200 million of business from the parent company. That can go well. So I'm just giving you examples. We don't own Honeywell. I'm just giving you examples. That's how we are placing the portfolio. The whole thing is survive this cycle, and you should do well for the next few years. So for given a choice of high risk, high return and low risk, decent returns, we at Stallion will always choose low risk, decent returns. So that's exactly what we have done. We continue to chase growth. If you see stocks like Amazon, MSFT, they've already bottomed out. They bottomed out in their wave A. Good quality companies typically bottom in the first wave, and in the next fall, if there is a fall coming, they will make higher bottoms. So you need to look at stocks which are doing well in this cycle, and hopefully the ones who survive. And I'm very confident a large percentage of viewers of PMS Bazaar will, but the ones who survive should do really well. So survival first. You increase your beta. So our portfolio beta, even in the bull market, was 0.65. That's the reason we fell less than the index. We fell broadly depending on our beta. Now we've cut down our beta to 0.32. In a bear market, you typically cut down your beta. In a bull market, you increase your beta. So that's what. Although in school you've been taught the other way, that you increase your beta in a bear market, you increase your, but that doesn't work so well because our goal is given a choice of high risk, high return and low risk, decent returns. We at Stallion will always choose low risk, decent returns. So that's it from my side. Be safe, guys. This is an opportunity to make it large. There are large displacements. With every displacement, there are new large trends that will be made. So out of the 30 odd stocks that were trending before this crisis, I can virtually with a lot of confidence tell you 15 of them will get out of the list and 15 will enter the list. The 15 that enter the list will become large monopolies or large gainers in the next 3-4 years. The other thing someone asked me, do we invest in mid caps and small caps? There's no problem in investing in mid caps and small caps. Don't buy because they are cheap. If you think about it, what are the small caps and mid caps that became large over the last 10 years. That was Relaxo Footwear, Astral Poly, Avanti Feeds, Page Industries, Bajaj Finance. So these broadly, I can take about half a dozen or 1 dozen main name tops. What was common? A Pidilite. What was common in all these stocks? There was only one thing. They were all market leaders, right? So the first criteria of you buying a small cap or a mid cap cannot be if the valuation is cheap. The first question you need to ask yourself is that are these market leaders? The second question is, are these going to grow well? Wherever you find growth, that's where large money will be made. History tells us market chases growth, and that will happen for the next 3, 4, 5, 10, 20, 40, 50 years. Take care, guys. Thank you so much for seeing this video, and I look forward to see you soon. Bye.